Good morning, guys. Welcome to this Wednesday, June 17th. And we are looking at the market, which is kind of in a little bit of a holding pattern. We backed off a little bit yesterday, in a whole little bit of a holding pattern right now. It is Fed Day. So we are going to get the first Fed announcement come out. This is going to be first of Warsh's tenure. And that's going to be very interesting to see how the market reacts to what he says and how he says it and what kind of changes he makes. Now, so we had mortgage apps this morning, but I don't see a number print on that, so I have nothing to say about it. We get the retail sales at 8:30, the business inventories, pending home sales at 10. Atlanta Fed business inflation expectations also, so all that at 10. So business inventories, pending home sales, inflation expectations at 10. Oil report at 10:30. And then the Fed announcement at 2. That's going to be the big deal for today. So you can see the ES backed off a little bit. Nothing really in terms of a sell-off, but definitely backed off a little bit. And we'll see if they where they're going to go from here. So they gapped up a little bit. They ran out of gas. They extended yesterday. They extended the day before yesterday. Yesterday did not extend. So this is stage 2 kind of development. Stage 3 would be if they can't take out the low here and they stay within this range, then we have stage 3. But it's I'm thinking that they're going to have some action here at the 2 o'clock hour when the Fed number comes out. And widely expected that they're not going to change anything, but it's going to be interesting to hear the press conference and what he says, how he says it, and if they are going to be any kind of dynamic change in how he comes out to this information. Because they had his dot plot with all the opinions, and then everyone's talking all the time. So we'll see what he changes, this Warsh guy. So there's definitely an opportunity for this market to take off to the upside or the downside after this news comes out, depending on how he says it and what he says. Usually when they just start off like that, they can put the foot in their mouth and say something the market doesn't, but they don't quite mean, or the market misinterprets. So there could be some stuff like that going on as well. But we'll see. So that's at 2 o'clock hour. But right now, I would just start off range bound. I would trade it as a range. Maybe favor the long side still until we get past the Fed announcement, and I will see if we get any real directional movement. Early on, I would not be surprised if we get further weakness trying to close this gap we had from the rollover. So that was a pretty good one at that. Rollover gapped up. The Iranian news thing gapped up, and we have some gaps to close. So that's usually going to be retraced. The question is if we're going to get that happening today. Hard to say, but if they start taking out, I would probably say this area, the 75, 65. So if that starts coming out, I would just be stay. I would look for a short retracement trade at that point. See if how far they want to take it at that. How far they want to take it in terms of closing the gap. So that's kind of the I think the level I'm going to key in on for a potential short. Otherwise, I would look to buy against that 75.80, 75.65s for rotations back up. I would look for short setups against the 76.10, 76.20, 35s up to the 45s for rotations down. So fairly straightforward. We have a small level here at the 7600s. We're kind of trading right at it. I'm not going to really lean too hard against it. But looking for shorts against 76.10, 76.20, 76.35, and 45 to 50s. Looking to buy against that 75.80s, 75.65 for rotations up. If they take out this 65s, I would look for a potential short retracement trade towards the downside. Still potentially buying against the 40s, the 30s, the 20s down here if they get down there. But as I said, it's no reason to be aggressive about it at that time. If they start heading lower, you only watch for a pretty good setup, retest failure type setup, market stalling, maybe showing some life to retrace, then you try a long trade and for a retracement back up again. So once it started, I mean, it gaps up like this, a little bit crazy, then you want to be a little bit cautious on aggressively getting on any pullback because they can retrace quite a bit, and the goal is to close these gaps, you know. So especially gapping up here into the 14th, that would be Friday. You can see we closed down here at the 7500s, gapped up to 7540. So we have a pretty good range right there to close. And then we traded way up there to 7600 and then some. So starting off range bound, looking to favoring the long side still, but watch that 65 for a potential retracement trade. And that's the way I would approach it this morning. The news we have prior to the Fed announcement, I don't think it's going to be. I think retail sales is a big one at 8:30. After that, probably not so much happening. On the Nasdaq, same story there. Pretty big moves up to the upside, gaps to the upside. But Nasdaq, look at that. They retraced the whole freaking thing, that whole session, all the way down here almost. So Nasdaq has done some damage in terms of the gap closure. It hasn't really closed the gap below it, but it's definitely done some damage on that run up here with the on the Iranian deal. So this is all the Iranian deal run up in the overnight, run up in the session, and now everything just goes flat out retraced. Now they retraced pretty much about half of that in the overnight, backed off from that. So I would start off range bound. I'm almost starting with the bias to the downside on the Nasdaq, given that where they're trading and how hard they retrace this. But I'm going to just emphasize range bound trading. I would still favor. I would start a range bound. I'm not going to favor the long side on this one just yet because it's Nasdaq is driven by it's so volatile. You have some of those big names like the AMD, Micron, and now SpaceX and stuff. They are big freaking behemoths, and when they start moving, the market moves. So they can certainly move lower, and they can drag the market right back up again. We just have to be a little bit cautious about it. But the pullback is a little bit too big to ignore. So I would start off looking for potential weakness, see if they want to try to take it lower. If not, just stay range bound. If they start taking out this area, the 590s, I would be a bit more aggressive on the long side, looking for a retracement of all these double prints. That happened pretty quick. They ran it hard to the downside, retraced pretty hard for once, and then ran right back down again. So this ledge right there, this mean at 570, beginning of that support area. So that's the London high as well. So that's the area which potentially could turn this around. So looking to buy against. So starting off range bound, looking to buy against the 420s, the 360s, down to the 290s. Looking for short against the 530s, 600s, 590 to 600s here for rotations down, and pretty much range bound. Looking for potential more weakness early on here. See if that's going to develop. I'm not going to say you're going to lean to the short side because it could go either which way here. It could be that they overdid it yesterday and they start retracing. It could be that it's just the beginning of a little bit further retracing. So it's hard to say which one it's going to be, but well, that's going to react to what they do. And if they start taking out this low here at the 280s, just stay on the short side. They start taking out the session highs or London highs at the 600s. I would stay on the long side and see if they how far they want to retrace it. And of course, we'll see after the Fed announcement how it really shakes out and how these guys are going to be reacting. It'll be very interesting to see what happens with that. All right, so that's the ES and the Nasdaq. You're looking at the bonds. The bond market here is at pretty much in a holding pattern, just holding here around 113. They're definitely to the upside though. I checked my F1, I haven't checked that for a bit. You see capital flow has been slowly grinding to the upside. It's been a slow grind, but they're stalling out right here at the 113. So they're definitely off the lows, but they haven't quite started heading back up towards the 115s. And I would just say that they have the yields kind of in the split in the middle right now. So if they head up to around 15, yields comes down nicely. If they head down back to these lows, yields come head back up again. Now, I'm not in a camp really we think that higher yields is a bad thing. Cost of capital is a very healthy thing. But it's the problem is they have so much debt out there taken at close to zero rates, which they had to refinance, and that refinancing happens at higher rates. So a lot of companies are going to get stuck refinancing at much higher rates, and that's going to be a drag on the economy. So that's a big thing with the higher yields. But it's not unhealthy, and we'll see how that whole thing shakes. That's a slow moving process. You know, it's the same for the Fed, had to refinance debt at a higher rate. So, well, I haven't really heard what they're doing about it just yet. And there hasn't been a lot of talk about it, but I guess they're handling it pretty well still. Anyway, so that's the bonds. Just stay range bound on that guy. Look to sell strength up to the 1308. Look to buy weakness. At this point, down at here toward, well, they're trading right at that 1230 on 13, so I'm not going to do that one. But starting at the 1225s, 1218s here for rotations back up again. So fairly tight range. And there could be something up here as well above the 113.08s. I have nothing until they hit the 16s here, that little attractor area, but it could certainly be something in between there. So, but I'm starting range bound on the bond. Bond hasn't been moving very well lately. It's been pretty dead. So, not going to be. I'm not aggressively trying to trade that one. If I see that good setup, if I get a little bit of range and see a good setup, I'll try to take a trade. But otherwise, I'm just staying away from it. On the crypto side, the silver gold, this looks pretty sloppy in the overnight. That looks like a wild back and forth volatility. Gold, oil, been down here to 74. So oil is way down in the mid 70s right now. All right, so that is you see how quickly that dropped, $20 down from just a week ago, and it's going to kind of keep dropping as that signing happens, that Iranian deal signing. With cryptos, you can see Bitcoin is selling off, heading lower. Ethereum sold off, and it's kind of it's stuck in the range right now. Some big positions being liquidated, looks like. And it says flat out. You see this big flat thing going on here. That's the issue. This is a volume chart, volume 500, 1500. So that is 1, 2, 3, 4, 6, 7, 8, 9, 10, like 12, 15,000 contracts liquidated right there. It causes a pattern like that. But anyway, haven't did a couple of oil trades yesterday. Going to keep looking at it a little bit today. We'll see. So back to the ES and the Nasdaq. And if you want to trade crypto or dip into this stuff, you just need a Coinbase account. And I can show you how to set up an API key and connect it up. And then you can just trade the crypto futures contracts. It's a whole separate data manager. You can see I have it here on the side. Well, no, hang on, I went to the wrong side there. Hang on. I went back to the bonds. I wanted to back to the ES and the Nasdaq. So it's going to show you the symbol manager here on Coinbase is a whole different set of symbols. You have all the single crypto futures. Then you have the perpetual cryptos, which are non-expiring, or they expire after 5 years or something. And here you have the oil, gold, silver, and different contracts. So that's your Coinbase integration. But back to the ES and the Nasdaq, and so far these guys are just kind of twisting in the wind, trading around the mean. So we'll wrap it there for now, guys, and I'll see you back at 11:30 for the next update. So the ES starting off range bound, watching that 75.65 for rotation for a potential break to the downside. Nasdaq flat out range bound, watching the upper level here at the 600 and the lower at the 280s. For a potential break in either direction there. So that's how we get started. All right, guys, I'll see you back at 11:30 for the next update. So good trading, and I'll see you back then.